Hey everyone, welcome back. So today is Tuesday. Obviously, we got the CPI data out today, so we'll take a look at that. Bitcoin is trading kind of flat. There's some concerns that I have for it, so we'll take a look at that. We'll take a look at also the miners, how they did today, along with Bitcoin, and then we'll take a look at two stories that are kind of interesting is 10 billion reasons why Bitcoin could become the currency of reserve, basically. And if you wanted to get paid in Bitcoin, kind of things to look out for going forward. So without further ado, let's get into the numbers here. But first, you know the drill. I'm invested in the following companies. This is not financial advice. And let's take a look at the miners here really quick. So how they did today. Annie was actually down quite a bit. It was down 8.6% on the day to $1.70. It is now in the after hours doing kind of better. It's up 4.12% to $1.77. Argo was also up today 3.94% to 87 cents on the day. Bitfarms was down 0.96% to $3.08. Cleanspark was down 2.4% to $9.77. It's up a little bit in the after hours, 1.64 right now to $9.93. Cores was down 5.03% to $7.74. It is up in the after hours, 1.5% to $7.86. Digihost was up 1.29% to $3.15 on the day, and it is now down in the after hours, 2.54% to $3.07. So we're seeing kind of a mixed bag here as far as stocks, whether they went up or down. DMG was down 0.44% to 46 cents in the day. Hive was down 1.12% to $1.77. It is now up 3.95% in the after hours to $1.84. Hut 8 was down 2.63% to $4.45, and now it's up 1.8% to $4.53. Iris Energy was down 1.68% to $12.84. It is up in the after hours 3.12% to $13.24. Luxxfolio was up nicely today. It was up 9.96% to 26 cents right now. And Marathon was down 3.47% to $21.16. It is up 2.32% to $21.65 in after hours. And Mawson was up 0.47% to $4.31. It is right now trading flat in the after hours. And Riot was down 2.77% to $15.47. It is up 1.81% in the after hours to $15.75. So those are the miners. Kind of a mixed bag here as far as what happened. But let's take a look at Bitcoin, see what happened there. And we can see Bitcoin is now at 40,170 or so. Our support, or now it's acting as resistance, you can see it here on the chart, is basically 40,700. We came and tried it twice today, well, once actually, and then we came down off of it. This was right around in the morning, around 7 o'clock in the morning. We obviously rallied here throughout the night, overnight hours, and then ever since 7 to 8 o'clock this morning, we've been falling down, and then the last 4 hours, we've been kind of going back up a little bit. The thing concerning on the 1 hour chart for me is the RSI. RSI has gone way back up into the 50 mark. Last time we were around this mark here, we were obviously higher here at around 40,700, and prior to that we were over here at 43,000. So that doesn't give me a lot of confidence that we may go back up. Thing we got to do first, obviously test the resistance here, 40,700. If we can break through this and create it into our own support, excuse me, we'll probably end up falling down to our support here, which is at 37,500. Which we have done in the past. Here's just been quite a while since we did that. We did that back on, let me get rid of this. We did that on March 13th. So it's been a while. It's been about a month since we came down and tested that over here. And you can see we were pretty low on the RSI back then, we have also gone really low, even lower than last time. So I wouldn't be surprised if this could possibly be the bottom that we're seeing right now, or we may actually fall even lower from this. So we'll have to keep an eye on it. But right now, like I said, it doesn't look too good on the 1 hour chart at least. On the daily chart, we're seeing that the RSI is continuing to fall down. Let me make this auto. Make a little sense. But so we can see again here that we tested that resistance at 40,700. We have gone up a little bit on the RSI, which isn't bad, but we could probably still go down a little bit more. Last time we were below the 30 mark here was back in January 21, and we basically came in at that point right around the 35,000 mark or so. So like I said, we'll have to see how this plays out. Right now the 1 hour chart doesn't look too good currently. And let's take a look at Ethereum. Ethereum is at 3,034. It has obviously now gone below the 50-day moving average here, which is the green line on the daily chart. It has obviously fallen below the 200-day moving average and the 100-day moving, or the 20-day moving average on the red line here. And it looks like the red line is going to be possibly crossing over the 200-day moving average, possibly in the next day or so, unless the price rebounds here relatively quickly. So that's not looking too good either. Like I said, we might be coming back down to possibly around the 2,700 mark as well, which I'm kind of seeing like we're seeing a little bit of support or resistance here, depending on where you're looking at on the chart. All right, so that's it. Let's take a look at the financial data CPI data really quick, and then we'll get into some of the stories here. Obviously, UBS, we covered this yesterday. UBS said that was predicting 8.5% for the CPI for the month of March. They basically nailed it right on the head here, 8.5% CPI. And then they're saying it's obviously going to go down each month following after this month. So we might be around 8% in April. May would be around 7.2 if this holds the way that they are thinking it's going to hold. But we'll have to obviously see. But let's take a look at the data here, which we have right there. So there's the news release from this morning from the CPI data. And let's take a look at it here. So the consumer price index obviously was at 8.5%. So the all items index continued to accelerate, rising 8.5% for the 12 months ending in March, the largest 12-month increase since the period ending December 1981. So over 40 years ago from when we were this high on the CPI. A couple interesting things on it here is the chart, obviously. So here's the chart from last year. Last year we were right there and right there, right? So we were approximately at 2.5 for March. Now we are at 8.5, which is right about here. If you can see that, we're right about there. And based on what UBS is predicting, what's going to basically end up happening is something like this, that we're going to start slowly going back down to the levels that we were before. Obviously, the curve is going to be a lot more gradual. It's going to be probably something like this, right? That they're basically seeing here happen over the next 10 to 12 months or so. So if that happens, that is actually going to be a good sign that things are starting to slow down a little bit. As far as price appreciation goes, increases inflation. But we obviously have some problems here. So 8.5% for the month. Gasoline was obviously the biggest one here at 48% increase. No, I didn't want that. I wanted this one. So 48% increase on gasoline of all types, right? Fuel oil was up huge also, 70% increase compared to a year ago. And the other thing that was obviously still way up is used car prices were at 35.3, which is just crazy. Energy overall came in at 2% on it, and food away from home was also up 10%. So those are the ones that really kind of hurt the numbers here. And then you got new vehicles were up only 12.5%, which is it's still high. And then commodities, less food and energy. So the numbers didn't look that great. We obviously had 7.9 in February for the CPI. We got 8.5 now. So I'm hoping that it will continue to go down this trend here going forward, kind of like what UBS is saying. And right, but we'll see. We'll see if something happens in the world where things jump again. Anything is possible right now with the way that things are going in Europe. So we'll just keep an eye on it and keep you guys posted when that happens. But first, let's get into some of the other stories, and then we'll call it a day. I thought this was kind of interesting. This first story here that we're going to cover is Cryptoverse, 10 billion reasons Bitcoin could become a reserve currency. So this is part of that buying that is going on from, who's that going from? Terraform. So a crypto platform's pledge to amass 10 billion worth of Bitcoin to back its own stablecoin is firing up the market. It's part of a wider movement to crown Bitcoin as the reserve currency of a new age. So Seoul-based Terraform Labs has so far built up nearly 40,000 Bitcoin worth 1.7 billion in a series of purchases via a nonprofit affiliate, Luna Foundation Guard, according to publicly available blockchain data. So they still obviously have a ways to go. They want to get, I think, to 3 billion and eventually continue to purchase more. So Duquan's announcement on Twitter last month that the project would buy 10 billion worth of Bitcoin reserves to underpin Terra USD, breaking ranks with other large stable coins, right? So normally they would go with the USD equivalent that aim to minimize wild price swings and are typically backed by US dollar reserves, right? So those are some of the other guys out there. So Terra is definitely, going kind of against the grain here a little bit, going with Bitcoin instead of USD or some of other, like maybe the EU, even going with that. So here's a tweet from Adam Black or Duquan, and you can read it here. And the interesting part of it is, as stablecoins backed by Bitcoin reserves, according to Quan, will open you a new monetary era of Bitcoin standard, referencing the gold standard that formed the backbone of the global finance about a century ago. So he's kind of comparing it to gold and how that was a standard for a long time, and how Bitcoin could become that standard as well for a backed currency. Buying 10 billion worth can move the price in short term, said Powell, CEO of Sydney-based crypto lender Maple Finance, but over the long period, it's more what it signals that Bitcoin has been introduced as the hottest form of collateral backing for currencies, right? So we're seeing adoption here. Obviously, they believe strongly in it. Otherwise, they wouldn't be buying 10 billion of it eventually. And that would definitely get them into the place of being the top holder of Bitcoin, I think. MicroStrategy has about 4.5 billion or something like that. Tesla's got, 1.52 billion now of it. So this would definitely make them the largest holder of it. But there are obviously some dangers. So there is a danger some people are trying to position long ahead of buying, which could exaggerate a fall if the price starts to retrace, said Richard Usher, head of OTC trading at crypto firm BCB Group in London, who attributed Bitcoin's gains last month to an improving risk environment. So what he's talking about there is people could be getting into leverage. So they're going to obviously put a lot more money into it, thinking that the price is going to go up. If Bitcoin starts to fall, there's going to be a cascading effect where they're going to get basically liquidated, and it's going to be painful, right? So I shouldn't say always, but for the most part, I don't recommend leveraging on Bitcoin. Buy what you can. Don't leverage into it. Vettel Lund, analyst at Norway-based crypto research firm Arcane Research, who is tracking the Terra project purchases, estimates that to reach an initial 3 billion in reserves, it could eventually hold between 60,000 to 70,000 Bitcoin, depending obviously on the price of where it is. And then obviously if they're going to get to possibly 10 billion, it's going to be a lot more. That would obviously surpass Tesla, which has 43,200 Bitcoin, the public company with the second largest Bitcoin stockpile behind MicroStrategy, which has over, I think, close to 100,000 Bitcoins or something like that. So we'll have to see obviously how this plays out, but it is just interesting nonetheless. And then there's some more details on it as far as what's going to happen with it. So we'll have to see what happens with it, how fast they're going to be buying these coins up. Obviously, the faster they buy them up, the price could obviously go up higher from that. And then here's an interesting story as well. So if you wanted to be paid in cryptocurrency, here are the rewards and the risks associated with it. So looking at it here, there's no denying that with the great resignation, workers are more empowered to seek what they want from their jobs. Right, flexibility, better benefits, and new workplace perk is also gaining popularity, which is the option of being paid in digital currency. According to global poll by finance consultancy DeVere Group, cryptocurrencies could become more commonplace in salary negotiations with younger workers. More than a third of millennials, those aged between 26 and 42, and half of Generation Z, 25 and below, would be happy to receive half of their salary in Bitcoin or other forms of cryptocurrencies, revealed the study. So that's actually interesting, right? So the younger you are, the more likely that you want to get paid in cryptocurrencies, which kind of makes sense. Right? It's kind of the thing that the younger generation is not being accustomed to. Can't being accustomed, but it's being used to, right? These NFTs, cryptocurrencies, that's kind of what they know, and I think that's what's going to shape the future going forward. So it's kind of interesting. Another survey by SoFi and Workplace Intelligence of 800 U.S. employees showed that 42% of them would like to receive non-fungible tokens as performance rewards. So basically, instead of getting a bonus, you would get an NFT of whether it's an ape or whatever it might be. And then also offering to pay your employees with Bitcoin can be a way to attract what we might call future-thinking workers, especially if you're in certain industries like fintech, he added, which is true. And then SharkRank is one of the companies offering to pay cryptocurrency in a bid to lure younger workers. So that's something that you're seeing as well happening. And then Chris Adam is a founder and CEO likened the appeal of crypto salary among the young to when Starbucks first became popular. It was important to be seen with a Starbucks cup. So it's very similar with respect to being able to have some sort of cryptocurrency because that's what all their friends are talking about, right? So it's bling, being a part of a group that's able to have common interests. But it also comes with both rewards and risks for employees. So the rewards are obviously speedy payments. So when your employee makes a payment to you using a digital currency, as soon as your employer makes that payment, the next second it is in your account. Obviously, that would be like a Lightning Network. You don't have to wait until the following day. Otherwise, if you do it on the blockchain transaction, you're talking maybe a couple hours to see that transaction. I mean, you can see it pop up, but you can't do anything with it until the transactions are verified multiple times. They would obviously have immediate access to hold crypto in their portfolios without having to convert from fiat, which factors in additional transaction fee. So obviously, if you got paid in fiat and then you wanted to transfer that over into a cryptocurrency exchange, there's obviously fees with that. Buying the cryptocurrency, you pay a fee with that. Selling it, you pay a fee with it. So given the fact that you could get it already in crypto form, that saves you some fees. So there's some savings in that as well. Avoiding taxes or not, so this is still a gray area. So when it comes to cryptocurrency tax laws, the country you're working in matters. Some countries are very lenient in that regard. For instance, Portugal is known as a crypto tax haven for its 0% tax on Bitcoin. When you consider how much these assets are increasing over time, they are significant gains to be made if you're saving on that tax side of the equation. Trevor's added. And volatility is obviously a big thing. It's no secret that crypto market is volatile, so that's something you got to be careful, right? We could have swings in 20, 30, 40% within a couple of weeks. So it's great when it's going up, but it does hurt when it's going down. So if you're getting your salary payments by week or month, it goes in as a certain dollar value today and it grows automatically over time. There are some serious returns, but there could also be some serious losses as well. As for sharp ranks, Adam, navigating the ups and downs of digital currency can be a very positive experience. We see that a number of kids go through cycles like that. Let's say overnight, I wake up and cryptocurrency has devalued by 500%. The first thing I'm going to do is ask why, and then I'm going to figure out ways to make sure that that may not happen again. Adam. I think he's kind of looking at this a little bit with experience behind him. Most people, when they go down 50% or 500% on something, they're basically, either selling it right away, getting rid of it, or, they might be panicking on it, especially if you were up 600% on it or something like that, and you're down 500% on it. It's not something that you're going to be thinking, how can I change going forward? It's kind of also, what's the next coin that's going to give me those high returns, right? So that's kind of where kids are at. They're looking for fast bucks. It's not always the easiest thing to do. I think he goes into continue on saying, I think that's an applicable skill in asset allocation and investing, sure, but I think you have to grow into it. It's not something that when you're young, depending on the age, I think this is kind of, what's the word I'm looking for? It can be also devastating, I think, in a way, because if you're down 500% on something that you were up 700% on, or, even if you were leveraged or something and you go way down, this could possibly take you out of the market for a very long time until you build that confidence back up, I think. Continuing on here, so we found that younger demographic who might have a higher risk appetite tend to see risk reward through a different lens than somebody who has really only ever known being paid in cash. So I'm sure that is also, I think, I would agree with that as well. And obviously the big thing is cybersecurity. So a lot of scammers and attackers are targeting crypto wallets. They're using social engineering in the exact same way we get phishing emails, said Jarvis, which is true. So you got to be careful of that. And if you're not a security expert, knowing exactly how to secure those assets can be really hard. Really hard. You're storing assets on a third-party platform, so there's always risk. So my recommendation would be get yourself a Ledger wallet or some of the other ones that are out there, something that's a hardware wallet where you actually have physical custody of those that money, unless you intend to spend it, then put it on an exchange or Cash App, whatever you're using, and use it for that way. But don't put it all in there, put only a certain amount in there. And then obviously finding platforms that offer insurance and of assets and barriers against money laundering will mitigate risk exposure when using digital finance. So obviously use reputable businesses like Coinbase, some of the other ones, Gemini, the ones that are obviously established and have a really good track record from it. So that's it. That's kind of what I wanted to share with you guys. Let me know if you guys are getting paid in Bitcoin, or if you'd like to get paid in Bitcoin. I really don't know if I want to get paid in Bitcoin right now, especially with how volatile it is. I would rather just dollar cost average into it next amount that I can put into it, instead of relying on it to be my full source of money that I have to spend as far as paying bills and everything else. Because if it goes up, 20%, that's great. But if it goes down 20%, let's say I have $10,000 and there it goes down, 20%, I'm down to $8,000. Well, that's $2,000 that I lost. That's basically a house payment and then some. So that's kind of where I stand on that. But a portion of my paycheck, sure, 5% or something like that, getting paid in crypto might be kind of cool. All right, so that's it. That's all I got for you guys. Obviously, no news on miners today. Nobody provided anything. I'm still waiting on Mawson to provide their March updates. Hopefully, it'll be tomorrow, because I think tomorrow, but by the end of the week, I think they should provide it, because they usually do it like halfway through the month. So we'll take a look at that. Then we'll have all the miners done. We'll do a miner versus miner video after that. And I'm still working on Bit Digital for deep dive on them. So thank you guys so much for watching. Hope you enjoyed it. Let me know in the comments what you thought of some of the stories and what you thought of the CPI data, which was kind of rough. And hopefully we can go down going forward. So that's it. Thank you so much for watching. Have a great night. I'll see you guys in the next one.